reason why they're called a market maker, just to put it simply, is that they make a market. They're here to make sure that you can buy and that you can sell. They make their money on the spread and a little bit on directional trading, which we'll get to in just a second. So if there's a line here, what this means is that if price keeps banging, it can't get through, bang, 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 what does that mean? It means when price gets up to this level, there's more order flow to sell. Okay? You have selling pressure in the market when the market's bang, 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 it keeps hitting against a level. So I call it resistance, not because there's a line on the chart, but literally because there isn't a reason, either fundamental or technical, for the market makers to push price higher. Believe me, if there were enough orders up here to buy, the market makers would push price up there, hit these orders to buy, price would push up some more, hit some more orders to buy, push price up more, hit some more orders to buy. Or if the market maker knows there are orders to buy up here, and he knows that he can make money in between there, he'll buy here and sell to the people who have buy orders. Right? Remember, supply and demand. Let me do this. I'm going to go through this again because this is so important. Remember, this course and your relationship with me is not about market theory. This is about making money in the Forex. And in order to do that, you've got to understand how the market works. It's not enough to just hope that you can have some squiggly lines that cross on your chart, and that's going to be enough to trade. I mean, you just can't hope that these two moving averages are going to cross. You just take all the trades, and you're going to make some money. Remember from the introduction, I started out in the introduction, and I said that trading is simple, but it's not easy. Okay? So you've got to get this stuff. And believe me, once you really start understanding this, it will take your confidence level to a whole new place. And you're going to find that you're taking trades easier, and you've got a much better chance at making money. Okay, let me take a drink here. Sorry, I'm not yelling at you. I get excited about this stuff. Okay, I love trading. All right, so remember, we're talking about order flow. Okay. So you see a couple of different kinds of areas on the chart. You see one area which looks like this. Okay, it's a consolidation. It's kind of all cramped together. And it's black and filled in. And then you have another area which just looks like a vertical line. Okay, you see it here, here. These are all very good examples of an imbalance in order flow. Okay, so when the market is making a move like this, where it's just a line, boom, 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 it's going from one level to the next. What you're witnessing is order flow. Again, there's no reason on God's green earth for a market maker to push price around, especially in this large of a range. Okay, and I'll make one caveat. Inside of a small range, 20, 25 pips, sure. The market maker, they can push price around, but believe me, they do it during very low volatility times where they don't have a bunch of risk. Because remember, the market maker can't just put price to wherever he wants it, because they actually have to buy and sell the currency. Remember, this is just like we're talking about computers or shampoo or pens or cups or clock radios. A market maker has to buy currency to push price higher if he wants to do it on his own. And he has to sell currency to push price lower if there aren't other orders to sell. So when you see these big moves in the marketplace, what you're seeing is probably, I can't pinpoint it exactly, of course, because